So the IRS changed the standard mileage rate right smack dab in the middle of the year. What are you supposed to do about that now? Let's talk about that next. Hello, I am Alison Eddings. I'm a CPA in private tax practice. Welcome to my channel. I kind of want to apologize too first for like the video if it's weird, because I'm trying to make the video quality a little better, so I'm doing it on my iPad, and I'm not a video maker. I am a tax accountant, so I appreciate you hanging with me through like grainy videos of the past, or if this one's kind of weird too. I appreciate you hanging even though you're here for the tax content. So let's get right to that. So the IRS has changed the standard mileage rate right smack dab in the middle of the tax year, which makes things really awkward and unpleasant for some people. Yeah, because you know it's so much more clean when they change it at the end of the year, which they change it annually. It's supposed to reflect for business owners how much it costs to operate your vehicle. It's supposed to equate to what it would cost per mile. Now, the IRS, and I'll put a link to the press release from the IRS in the comments section, but the IRS increased the standard mileage rate by 6 cents a mile as of July 1st, 2022. That's a joke. I mean, seriously, 6 cents a mile? There's no way. Between all the costs of operating, not just gas prices, but gas prices on their own have gone up on a national average 60 cents a mile in the last 12 months nationwide, which actually seems really low to me, but I just, pulled some information. I think that was off the Wall Street Journal source, which still seems low. So what are you going to do about that? Well, number one, let's talk about changing information in the middle of the year. So if you are eligible to deduct miles on your tax return, and that's a big fat if, and I'm trusting you not to use this information to try and self-prepare or, think that you have all of the information that you need to make an informed decision, because these tax code is super complex. But my goal is that you have enough information to go to your tax preparer and ask some important questions, or to understand maybe why your tax preparer is doing the things that they are. So please, that's my caveat right at the beginning. Don't use this to go try and now apply law to because there's a lot of that there's a big if on even if you're eligible to deduct. So if you're eligible to deduct mileage, you're supposed to be keeping a physical mileage log. That's one of the IRS regulations. They're really picky about that. You have to keep a physical mileage log. Now that can be, a lot of people like mileage apps on their phone. I think they're really great. However, I will say at the end of the year, always print that PDF. Always, if you're my client, I'll tell you to put it on the server so that it's there. We have a copy, because like my wedding pictures are like on a 3 1/4 floppy. I didn't think that I was going to need to have them in some other alternate form. I'm really glad I printed them, because I don't even have a CD drive on my current computer. There's like nothing. If it's not on the cloud, you can't get to it. So same kind of idea for your mileage log. Make sure it's accessible, because IRS won't ask for 2 or 3 years. It's not like they're going to turn around Tuesday after you file your return and say, give me those mileage logs. So be prepared for that. But you do have to keep the written record. So you would, oh, there comes the cat. Sorry about that. Yes, we have a cat and the dog. So you'll already have the data that you need to be able to provide what your miles were for the first half of the year versus what your miles were for the second half of the year. However, that the rate does not adequately reflect the cost that you're spending, that might be an issue. So there's 2 methods if you're eligible to deduct vehicle expenses for your business. There's 2 methods. There's the actual expense method, and there's the standard mileage rate. And for some, again, here's another big caveat. Some businesses, it is IRS provides guidance on which one you're supposed to use. You don't get to choose. Like that video I did last summer on W-2s versus 1099s. If you have people working in your business, that you don't get to choose whether they're W-2 or 1099. A lot of people feel like, oh, I want them to be this or that. No. IRS provides guidance, and here comes the cat going to jump in my lap. So you might get to see little kitty nugget waffles. So the IRS provides guidance on whether or not you are permitted to take direct or actual expenses or the standard mileage rate. And once that determination has been made, it has to stay in effect for that vehicle in perpetuity until that vehicle is disposed of. So you purchase a vehicle, you place that vehicle in service, and you've decided on the actual expense method for taking expenses for your vehicle. It has to stay that way forever. However, if you place a vehicle in service and you elect the standard mileage rate, you can change it one time. Now you have to stay with that in perpetuity. However, I honestly feel currently that the deduction will be better to take actual expenses just because the standard mileage rate is so crazy low. But you do have to stay with that forever. Now, if it's a bookkeeping nightmare, if it's a paperwork nightmare for you, maybe it's just better to use the standard and know that you're going to lose some deduction. But if you already keep your records for your oil changes and tire changes and gas and everything that goes into operating your vehicle, let's just use that one. Now, you have to keep miles no matter what. You need to keep up with your miles for work, your miles for commuting, and your miles for other. So other might be, going to the grocery store or, medical miles, things like that. So you have to have a solid number. These are my work miles. These are the miles for commuting. These are other. So you have to have that. And the commuting has a certain definition too, because it matters what your tax home is and things like that. But, so let's see, have I covered everything that I wanted to talk with you about? Oh, yes. So there is a tool. I did provide a little tool. I put it on my site on topdog.tax. It's got other guidance, everything that's included in the guidance from June, the tax update from June. It's got some details on determining which method to use, whether standard or actual, and it's also got a mileage log for you. So if you go out to topdog.tax, there'll be a pop-up window that says, do you want this PDF? And you put in your email and it'll go right. You put in your email address and you'll get the PDF. So, and I did want to point out that no matter whether you choose actual or the standard, there's some expenses of your vehicle you can't deduct. And this is really why it's very important to have a CPA or other tax professional, absolutely somebody that's enrolled with the IRS. I think I'll put a link to that, how to choose a preparer and why to not have an unenrolled preparer. But lots of people I see come to me and they think that they can deduct the loan payments on their car. In certain cases, you can take a lease, but most leases are structured like purchases. You can't deduct that. So there's very specific rules about what you can and can't deduct, and it's an obvious red flag for IRS. So hopefully this was useful, helpful, informative, educational. I would really, you remember like how your 9th grade teacher would say, if you've got a question, raise your hand. You're not the only one with that question. That you watch this video, you're not the only one with this question. I get this question a lot. So share it. Share it with others. Share it with your friends. Like the video or subscribe to the channel. That pushes this content out to more people because lots of people have this question and need support on this. So thank you so much, and thank you for visiting today. Have a wonderful day.